Hello traders, welcome back to Your Nifty Guy. I hope you all had a relaxing weekend and are ready to get back into action. In today's video, we are going to start by breaking down Friday's market session. It was quite an interesting day with some sharp moves, key levels being tested, and a few clear signs about what the market might be preparing for next. We'll talk about how the price action unfolded, what the data and structure are indicating, and what kind of trader sentiment we can read from it. Once we have understood that, we'll move on to the trading plan for Monday. I will be sharing my exact thought process for the upcoming session, including the important support and resistance zones I'm watching, possible scenarios for both gap up and gap down openings, and how I plan to position myself depending on how the market behaves. So make sure you watch the video till the end because the plan will help you approach Monday's market with a clear structure and avoid impulsive trades. If you find these daily breakdowns helpful, don't forget to hit the like button, subscribe to the channel if you haven't already, and drop a comment with your own view for Monday's session. I always enjoy reading your insights as well. And as always, remember consistency beats intensity. You don't need to trade every move, just the right ones with conviction. Let's get started. So for Friday, uh, we had planned was to take a short entry below this particular low with a pullback, and long entries were planned only above this particular move. Now markets, although opened with a slight gap up, immediately came down for some selling. Right? Markets immediately came down for selling, gave us a closing below previous day's low, went up, invited some fresh buyers around here, did some time pass around here, then broke down below this particular low initiating a short trade as per our setup. But I did not take this particular trade. In fact, I did not take any trade on Friday. I'll tell you the reason very shortly. Just be with me. Now, while the market was trying to break this low that it had created around early in the morning, we could clearly see that the RSI was in an open-ended divergence, right? And that was the reason I refrained from entering into this particular short trade around here. And as you can see, it was a good decision because market post the breakdown moved with a very unconvincing move. Although it moved down, it did move down slightly, but then the move was very not convincing enough, and it was a good save. So RSI here saved us from a trade, although the direction was right and you could have booked some profits, but then again, it would have been a tricky trade, right? And it is always good to avoid such trades whenever possible. So, had RSI been giving us a good sign, we could have entered into the short trade, but then because RSI was not giving a clear sign, I refrained from entering. Then the market around here changed the structure on a 5 minutes time frame, then again change the structure. That is the reason why I told that again, markets were behaving in a very random way. And then this was the good entry around here when while the structure had changed again on the bearish side, a good sideways consolidation, and while the market was breaking this particular last swing low, the RSI was also breaking this swing low, right? So this was a good trade. But then again, while watching the market's choppy price action behavior around this time, I had decided that it is best left to not trade this particular day. I have traded very less on in this particular trading week, and that was the reason I decided let me just completely take a break, and I'll be joining in fresh from Monday with a fresh and clear mindset. And that was the reason I was not actively looking at the markets, but then again, anybody who would have been looking at the market. So this short again was a good trade, absolute good trade with a very small stop loss just above this particular uh, swing high, and this would have given a very good trade, right? Extremely good trade. One could have added quantities once this low was taken out. So all in all, a good trade. The exit could have been taken out around here, or maybe if you'd have held on for some more time around here, right? Trailing stop loss method, any whatever trailing stop loss method you could have looked, you would have booked profits in this particular trade if you would have traded this. Right, again around here, then markets went choppy again, gave a pullback, formed a higher low, gave a good buying move around 3 p.m. and then closing with a wick. So all in all, a good volatile day Now, days like these are good, but then again, it takes a lot of sanity away from you. I'm just sharing my honest feedback. So, once you are in the live market, you are experiencing this crazy candles, right? No solid move on in your favor once you are in a trade as well. And this kind of price action is what really like keeping and observing these price action for a long time will mentally drain you. And then again, just like I missed this particular trade, you would have missed. But then again, I have zero FOMO. I have zero FOMO for not taking this particular trade. Markets are always gonna be there. Markets are gonna be there on Monday. What it needs is me being prepared to take the best set of trades, and that is what really matters in the long run. So that is why I always say consistency beats intensity. You don't need to trade every single move. You don't need to trade every single. It's okay to take a day off. It's okay to take a month off. It's okay to take a week off, whatever be it be depending on your frame of mind. So yeah, that was it about for Friday's session and the trades that could have been taken. Uh, for Monday, we'll start with the weekly time frame. I'll quickly just hide all the drawings, right? It's a good thing that okay, the week has closed quite negatively, right? We touched higher levels, but then we have closed near the lows, and the closing is also lower than the opening. Looks like a good selling pressure has come in from the top. But then the good thing is we have closed above this breakout level, right? And of course, we will be facing in some kind of resistances once we are approaching the all-time high. But then again, on a weekly time frame, the candle is slightly negative. What that is what I would like to call it. But then again, the price action is not going to move in a parabolic move or a unidirectional move. It is going to give us some pullback. So this, I believe, is nothing to be scared of. And I think we are cool and good. So on the daily time frame, like I had already cleared on, this is the daily time frame fifth support, which is still very intact. And of course, prices have already moved a lot in the on the long side. The good thing is, even though the prices are showing us some pullbacks, there is no RSI divergence. So if you quickly compare these two highs, while price has formed a new high, RSI has also formed a new high, right? So there is nothing to be concerned about from RSI's point of view. Had RSI not formed a new high, again, that would have changed certain way of analyzing our trades. But then RSI has also formed a new high, so there's no divergence, right? This can be a usual pullback which is there. So for Monday, we'll keep the plan of action extremely simple, right? We'll start with the basic trade plan. Below this, we are short. Now, this might look that we are approaching a daily time frame support level, and should we be shorting the markets around here? Now, this might look like a small region for your extremely small place to play a short trade, but then if you look at it on a number of points wise, it is a good 0.5% move on Nifty, which is 100 plus points. So, of course, once Nifty breaks this low and with a pullback, we can take a short trade, right? But then once we are taking the short trade, we will be careful once prices approach around these levels. Around here, any positive price action can be used to create a long entry. Needless to say, below this, we will be looking for a short trade. Now, for a trade on the long side, I'll be using the. I'll quickly tell you what is going on in my mind is, say, for example, the pullback which had to happen has already happened, right? Around this low, which was made at 245 on Friday. So this was the higher low. The market also broke out above the swing low. So maybe we have formed, say, for example, we are taking into consideration all possible scenarios. We have formed a bottom around here. The pullback is done. Now we are planning to continue, Nifty is planning to continue the journey on the upside. So what is to be done in that particular scenario is we will look at places where we can go long. So this looks like a good swing above which we can plan a long entry. This, if we also check for the entire move of Friday, is way above the 0.5 to 0.618 zone. So the 0.5 to 0.618 zone is around here, and this is way above that. So we can definitely look for a long trade above this particular swing high. But then again, on a 75 minutes time frame also, I will quickly be taking a look at the fib levels. Let us assume that this low is going to be protected. So this is also a possible in case if we are not, the pullback is not done, if this is a reversal, this is the level around which we can also look at for some negative price action. Now, I am do not get confused. I am simply preparing you for all possible scenarios, right? A move above this, provided this low does not gets taken out, can lead to a move on the upside. We can capture that. In case if we see some resistance around these levels, I'm marking out important resistance, keeping in mind a multi-time frame analysis, right? I'm not simply biasing my analysis on the 15 or the 5 minutes time frame. I am taking in, so this is the daily fib level, this is the fib level that we have derived in the 75 minutes time frame. So I am taking in multiple confirmations, and then I'm planning all possible scenarios, right? This particular zone, I will be avoiding any particular trades. Now, the best trade would be if market opens flattish and then gives us a move on either side, right? Slight gap up, slight gap down is perfectly fine and perfectly okay and can be played. But then again, any bigger gap up or bigger gap down is something which will uh, take away the trades overnight. Now, another interesting thing is, although Friday's price action was negative, right? We saw lower highs, lower lows throughout the day, but then again, the cash market data, both FIIs and DIIs have been net buyers. The amount that they have bought might be very, very low, but then again, they have been net buyers. So that is the reason I am considering, maybe if this is the pullback is done, and if we are to plan and continue the journey on the upside, we are prepared to capture any moves, right? So do not get confused by so many path or directions or trade ideas which are there. It will all depend on how the market opens, where the market opens, and then where we are headed, right? So yeah, that wraps up our analysis and trade plan for Monday session. I hope this breakdown helps you go into the day with more clarity and confidence. If you found the video useful, make sure to hit that like button, subscribe if you haven't already, and share it with your trading buddies who might find it helpful. Also, drop a comment below with your own view or plan for Monday. I would love to hear what you are seeing in the charts. And remember, the goal isn't to catch every move, it's to catch the right ones with discipline and patience. See you in tomorrow's video. Until then, trade safe and stay consistent. Cheers and thanks for tuning in, guys.